Okay, hello and welcome everyone to today's event. I'm Jason Gumpert from MS Dynamics World, and we're here for a session on fixing your inventory in Dynamics NAV. I'm happy to welcome our speaker today, Jeff, from Catapult, and we are going to get going. So before we start, I just want to let everyone know that you can ask questions using the Q&A block that you see to the right of the slides. Jeff will be leaving time at the end for questions. With that, I am going to hand things over to Jeff Landeen.
Good morning, everyone. My name is Jeff Landeen. I'm a Senior NAV Specialist with Catapult ERP. I'd just like to thank everyone for attending this morning and certainly appreciate everyone participating in these NAVOG groups and these NAVOG sessions. Just to maybe introduce myself and get everyone comfortable with who I am, I've been working with NAV since 2002. I've worked with a number of partners both in Canada as well as New Zealand for the last 10 years on both the technical sides of NAV, modifying the product, extending the product, certainly cleaning up a number of implementations that have gone wrong. And I certainly have worked on a number of implementations to try to get these things set up right from the first time. I do have a background with troubled installs as well as manufacturing implementations as well. So certainly if there's any questions that you guys have, maybe different costing methods or models or problems you have, certainly feel free to hold those questions, and as Jason said, we'll have those at the end. A little background on Catapult ERP. We're a managed service provider and a implementation partner for Dynamics CRM as well as Dynamics NAV, based here in beautiful, not so sunny today, Vancouver. So just kind of an agenda for today's session. I'm going to spend a little bit of time going through some real-world problems, overview things. I'll be kind of discussing some of the setups and some of the transaction flows just at a high level so that you guys understand the topics and some of the concepts. And then towards the end of the session, I will jump into NAV, walk you through and where some of these tools, where some of these features are located, give you an idea of what they look like and how to use them in the actual NAV 2016 environment. For some of you that may not be running on 2016, a lot of the core ideas here have been in the product for at least since, in most cases, version 5.0. But there may be some differences between what you see in your site or have experienced in your NAV, especially if you're still running in something that's based on the classic client. Jason, I think we'll be monitoring the chat, so certainly if you do have any questions or if you want to post anything while I'm going through my presentation, please feel free to do so, and then he'll collect all those up and maybe forward them to me at the end of the session. So to get us started, I'd really like to focus on maybe some of the big things that I've certainly seen at a number of sites and some of the biggest problems that we have when dealing with these kind of problems. A lot of the inventory problems are usually related to processes and kind of configuration, and in most cases are not necessarily the application itself. So an important takeaway that I'd like to have everybody kind of think about as we're running through this is the whole focus here is to make sure you understand some of the tools, the technology that are there in base NAV, as well as some of the configuration do's and don'ts, so that you guys are going to get the most out of your inventory systems. One of the first and foremost problems is adjust cost is the tool. It is the process in NAV that moves costs through the system, from those sources to the sinks, and is how costs flow into the GL. Adjust cost can be configured to run automatically every time you post a transaction, but especially in older sites, adjust cost may not have been configured to run every time you do a posting. There can be valid performance reasons that this isn't done, but it is so important that adjust cost gets run on a timely basis. And kind of related to that is open purchase orders. The more open purchase orders you have, the more effort adjust cost has to use, more system resources it requires to run through all the open transactions and post everything through to the GL. So in some cases, that may be why performance is a problem. If there is open purchase orders or other open production orders for the manufacturing environment, those drive system resource requirements, which can drive down performance. So as long as you are regularly clearing up purchase orders and you're making sure you're either always running adjust cost or running on a very frequent basis, your inventory costs will always be flowing to the GL. There should be no need to true up inventory at the end of a period. So manual entries, mixed period inventory transactions. An example of this scenario is going to be I received a shipment of goods from my vendor, say at the middle of May, but the invoice doesn't show up until June. You now have a scenario where the cost for the goods received was expected in May. It's going to be rolled into the GL in May, but that actual invoice isn't going to show up until June. That means in some cases that's led to people go, oh, my inventory subledger is out of balance, and now I'm going to post adjusting entries to make it look right at their month-end close. You know, a couple weeks later in the middle of June, the invoice shows up, and now all of a sudden you have the problem where now your inventory is out of balance because adjust cost has properly pushed that cost through, and you have manual entries that are driving up and impacting your inventory values. So mixed period posting is a scenario that usually drives our next point, manual entries and entry errors. It is so important that for the inventory control accounts that you do not manually make postings to it. There can be valid reasons to do it as you're turning your inventory system on, but really after that, the only entries that are in or are made to your GL, to those inventory control accounts, should all be system processes, whether it's adjust cost or some of the revaluation tools that are available to restate inventory value. There should be no need for manual entries. If the one caveat is not manual GL entries, but is when you're doing positive adjustments. If you have to positive adjust inventory, the one thing to always watch out for is the cost fields on the item journal as you prepare it. That cost will flow through to the GL exactly how you post it. So if you incorrectly had the unit cost on that positive adjustment as you positively increase inventory, it's going to flow through to the GL at exactly whichever value you put on that journal line. So that can certainly be a scenario where people will see big swings in inventory value in their GL. It's because someone maybe fat-fingered a unit cost on a positive adjustment. In kind of the similar vein as the mixed periods, where you have kind of some posting that occurs in May and then in following June, we have this scenario with the unfinished production orders. The finishing step of production orders is what moves your final costs out of WIP and into your finished good inventory, and that is not going to occur until you actually finish the production order. It's a really important step. It's something that sometimes gets overlooked. In sites that are so focused on getting inventory out the door, you want to push the button to post the output, and people forget that you've got that very important invoicing step of finishing the production order. And if you have a good month-end process, and that's something we'll maybe touch on later, dealing with regularly cleaning up purchase orders, finishing production orders, that can all be put into a a good, well-structured month-end or period-end close process so that you don't have these problems going on. And the last one, from a development and design perspective, is making sure that you are very careful when you're customizing anything that touches either adjust cost or posting inventory. This is certainly NAV being an extremely flexible tool. I would never ever recommend, hey, don't customize NAV, but you want to be very smart about where and how you customize those things that are going to impact inventory. Because just posting the inventory to your item ledger and getting the quantities right is not enough. You want to make sure that you're always considering costs as you go through any of those design cycles. So when we're talking about cost and we're talking about kind of keeping our inventory in balance, it's always important to make sure that we've got appropriate costing methods selected. So I do want to touch on that very quickly. And certainly if there's, there may be scenarios, and I think Jason has just sent our first polling question out. Certainly I'd love to hear what costing methods you guys are using. Certainly feel free to select multiple entries because in some cases you might be running multiple. First in, first out. Hey, Jason.
I was going to say I think this might be limited to a single choice. If it is, I apologize. But if you do have extras, please just feel free to add them to the chat if it was limited.
Okay. So maybe if you do have multiple, maybe select the one that you use the most. So it's always so important for the right type of inventory transactions that you select the right costing method. That can differ by product. You don't have to feel like all of your inventory should be FIFO or all of your inventory should be standard or average. You can certainly mix and match as needed for your individual product types. For first in, first out, really, this one's kind of obviously a very common one. It just means that the cost is going to follow that item. The first inventory value, the first receipts will flow through to your first shipments. I don't think LIFO is a costing method that's certainly allowed in Canada because it can decrease your profit, and that can have tax implications. Now, when we're dealing with average cost, certainly this can be a problem if you have, say, high volume of transactions that might be pennies. When you have high volume, low values, there's an awful lot of transactions that are flowing through your system. All of those average costs entries are going to, at some point, need to be revalued, scanned, and adjusted to come up with a daily average cost for that inventory, and that takes a lot of system resources. So if you have extremely high volumes, maybe you're doing thousands of invoice lines in a day, and they're low value items, that's an indicator that average cost is not a good choice. Specific certainly really is only for serialized inventory, and then if you are manufacturing, probably in most cases standard cost is probably the costing model that you want to select. There is some overhead with that. When you're dealing with standard costs, you may want to get into cost accounting or turning on the cost accounting module, and you may want to have resources such as cost accountants who can help overview your costs and make changes to the standard on a periodic basis as the fluctuations in whatever commodity or product necessitate. So now that we've got our costing methods kind of covered, the other important things to consider now when we're looking at our inventory setup is this automatic cost posting. So automatic cost posting is actually on the inventory setup page and can be configured to post through as part of every single transaction. Certainly in 2016 and the newer models that perform, and the newer versions that perform better and don't have as much don't require as many system resources and are really optimized for the new SQL version of NAV. The performance cost has gone away. So in most cases, I would probably recommend that you have automatic cost posting and expected cost posting. Now, expected cost posting really only impacts the actual inventory transactions, and when it's enabled, NAV will handle the posting of inventory accruals through to the interim accounts. So this would allow you to see that, you've received, for example, you've received the goods. So there will eventually be a liability that you'll have to pay someone, but maybe the invoice hasn't come through, so that you can have that accrual there on your books. If you don't need that, or if the invoices are always going to come immediately as soon as you, or very shortly after you receive the goods, maybe you don't need expected cost posting. But again, it's really only performance that's going to be impacted by this. And in most cases now on newer systems, I really don't know why you wouldn't have automatic cost and expected cost posting. The adjust cost frequency can certainly come into play when we're looking at things around average costed items, and you want to see, excuse me, and you want to see the average cost kind of swing, and maybe it makes sense to have the average cost item adjusted, or average cost items adjusted on a daily basis. Maybe it needs to be adjusted on a period, like say a month or every week. The adjust cost frequency is where you would change that. Of course, if you're adjusting average costed items on a daily basis, again, there's overhead to do that, and you just have to be aware of that. If there's no real business need and you're not getting any value, maybe items swing a cent or two, there's just no point in having average cost items adjust on a daily basis. But if they're really going to swing a lot, or they're going to have some big financial impact, then maybe you do want it running on a daily basis. And finally, preventing negative inventory. Negative inventory causes problems when it tries to put costs through to any sort of related transaction, because the item application entry and the item application engine in NAV really struggles to move costs from, say, an inbound document through to any other functional area or GL area in NAV if inventory drives negative. So there is now the ability to prevent negative inventory on items, unless you absolutely have to, like there's some inventory requirement that you will drive negative on, say, a production floor or something else. I would always recommend that you would have this enabled. You do not want to have your inventory go negative. When we're dealing with item units of measure, you always want to have your base unit of measure be the smallest available item or the smallest unit of measure for an item. If you have a base unit of measure and maybe you have some other quantities or other units of measure that are sold in different quantities that are smaller, you can have rounding and precision errors that will flow through because you're selling part of what is a base unit of measure. The standard cost and all those other values are assigned on an item at a base unit of measure level, and you would be subdividing that, and again, that can lead to rounding problems. Generic items I don't see very often, but there may be a scenario where you might have a generic item that is maybe really a placeholder because you don't want to go through the effort of setting up items. Of course, from a costing method, you really can't track it. So you should always make sure that for every item that you're actually going to sell or move or physically deal with should actually have a real item record for it. On the manufacturing setup, so cost including setup, this is where you can control, and this is for manufacturers, so for any manufacturers out there, if you want the cost to include setup time on your production line, this will control that so that you can have the costs that are represented and flow through to the GL include some element of setup time. And when you're dealing with work centers and machine centers, your general product posting group works very similar to how those things work with an item, so that you can have the appropriate posting or the appropriate GL accounts get hit, just like when you're posting an item. When you're setting up WIP accounts, the recommendation from a location perspective is I would make sure that you have WIP accounts that are set up by location, and you should really, for those WIP accounts, only have different inventory and inventory interim accounts. All of the other accounts in your kind of setup of WIP accounts should be the same. For the most part, you really only want to differentiate by location for WIP accounts. If you start having different accounts for all of the other accounts in your WIP setup are different, you're going to lose track of where WIP balances are flowing, and that can be a nightmare to clean up. We'll move to the chart of accounts, direct posting on inventory accounts. I think I hit on this earlier. It is so absolutely vital that you turn direct posting off on inventory accounts. There really is no reason that I can think of or have experienced that if you're outside of that first startup phase, that you should have any sort of direct posting on your inventory accounts. And I would also caution you to avoid multiple sources posting in the same account. So what this means is if you have an you should have an interim inventory account that should be separate from your inventory account, because you will lose transactions if you don't. From a dimension setup, we want to make sure that we don't have, or we're careful when we're blocking dimensions. If you block dimensions that are going to flow through the interim inventory account or any of the inventory accounts, those dimensions will block people from posting. Inevitably, what happens when you start doing that is that users try to get creative in how they're going to post things through, and then your lowest level transactions are not correct. Either they've posted things forcibly into a GL, or maybe they've selected a different item, a general product posting group, or something else to make that document post. So probably really want to be careful with our block dimensions. The where used feature is certainly, and that's with the little icon there with the 3 arrows, is really good at highlighting when there are conflicts on an account. So if you're trying to find out where problems are, this is a quick way to drill through and find out where is that account used, what are the items, inventory, posting groups that can possibly be posted into that GL account. From a transaction flow perspective, obviously in NAV, we want to make sure that, sales shipments are going to impact the inventory that is being sold out of NAV or decreased. Purchase receipts are where inventory is going to be driven up. Obviously, the most important thing is that we have our inventory posting groups set up so that all of the costs associated with receiving the goods are going to flow through to your sales shipments. There is a very detailed white paper from Microsoft that covers these kind of costing method configurations and how these processes work. So I'm really not going to go into too much detail on a number of these, but that is something that we'll be including as part of the resources that we send out after this presentation. So when we're looking at inventory periods, we really want to have one average costing method and frequency per year. So if your average costing is, say, by item or maybe by item and by location, you can only change that on an annual basis. So if you pick one at the start of the year, that's what you're going to have to live with until the end of the year. As part of any regular month-end process, I would always recommend that you close and lock out old periods so that only finance users can post into those. And that's just a regular step, and that's easy to do. Uh-oh. Not flipping through. So some of the tools, and now that we're getting into the tools, I really want to switch over to my NAV application and share my screen. So hopefully at this point, so I'm just going to switch over to NAV here, and I'm going to show where a number of these features and things are enabled in the application itself. So certainly want to start with our inventory setup. So if those of you who are new to NAV and haven't worked with NAV 2016, this is the new features. We have the ability in the top right to search for pages. And so as I mentioned, we now have automatic cost posting, expected cost posting, and we also have our cost adjustment. These are the features that in most cases will be turned on by default. And as you can see, we have the average cost calculation is by item. It's not by any lower level detail, and it's done on a daily basis. This is certainly what I would say is the kind of standard configuration that I would want to have in NAV. And well, except for maybe the average cost period. Depending on your inventory and how well it moves, this may not be something that we want to have configured. Because again, there is a transactional cost to having average cost being adjusted on a daily basis. So I've broken down my items. I've applied some filters here, and I'm going to start with a standard cost item. If we take a look at the bicycle that we have here, again, piece is the lowest individual unit of measure that we can have for a bicycle. So it is important that we have base unit of measure set up as the kind of smallest inventoriable level of that item. Now, we also have cost is adjusted and cost is posted to GL. These values here indicate when or whether adjust cost has been run on this item. In any sort of environment where adjust cost isn't being run as part of any posted transaction, these will be unchecked. So what this tells me is that means right here, any costs associated with this item have been posted through to the GL. Because we have both the cost is adjusted, which means the actual unit cost calculated for this item is correct, and it has been posted through to the appropriate GL accounts in NAV. So one filter you may always want to set up, and I would recommend this if you are not always automatically posting adjust cost, I would build a new filtered set that has cost is adjusted and set it to no. and maybe have this saved as a view. For those of you who are running a manufacturing environment where costs aren't being adjusted on or aren't automatically being posted through, now at least you would have a bucket to quickly monitor, check if I had any items here, they would show up as not being adjusted. But because I have adjust cost turned on and it runs as part of every transaction, that's certainly not anything I'm going to see here. On the average cost items, and one of the ones that we have here is printing paper. When you actually scroll down to the standard cost, you've got the ellipses here that's available. And when I click through on the ellipses, I'm going to see a breakdown of the average cost items. So this shows on a daily basis what the unit cost is based on every transaction that's flowed. As purchases were paid out and invoiced, that's going to drive potentially costs up or down, and then those will work their way through. Because this is an average costed item, when adjust cost runs as part of any posting transaction for an item, it's going to potentially revalue this inventory item, and they'll be easily visible here. You can drill down into each closing entry and find out where did the increase come from, why was it revalued. So the entries on the 9th, we can see there was a purchase. On the 10th, we can see there was a revaluation that was posted. Departments, general ledger, chart of account. So when I go to my raw material account, 4301, 14301. So on the Navigate tab of our chart of accounts, we see kind of two important features. The dimensions is where we are going to see the dimensions that are required, and we do want to be careful that we don't see any sort of no code or code mandatory or same code. Those can kind of restrict the dimensions that are going to flow through, and if we have any restrictions here, that's going to cause problems when people are posting a transaction. So typically, I would not want to have any dimensional restrictions on inventory-related accounts, and this is an interim inventory account. Also, the Where Used feature is available here in the Navigate, and this shows me that this raw material account, or interim raw material account, is only ever used in the inventory account interim area for different locations. So this looks reasonable. This is maybe the first stop if you're having problems where you think the wrong values are getting into an interim account or any other accounts. Is you want to look at what fields, what posting setup fields are instructing NAV to move values into or out of that account. And this one makes sense. Oops. So, as I mentioned earlier, WIP accounts. All of the inventory posting setups accounts all use 14600 as a WIP account. As far as tracking and traceability, to break things down by location, certainly you could potentially look at having a location flow through as a dimension if you want to see that in the individual WIP account. but I would not want to have different WIP accounts for different locations. It's going to be extremely difficult to unwind WIP or track problems through WIP if you have WIP flowing into multiple accounts. So as I run through these, I'd like to hopefully be done in the next 5 or 10 minutes. So hopefully if we have any questions, I don't know if you guys are seeing anything or if there's anything that jumps out at you, please feel free to log your questions. So on the Work Center card, so Work Center card, of course, this is where you can have any additional costs that get applied as part of any transaction that flows through those work centers. Most of the cost-related values are going to be filled in here on the posting tab, and they will flow through as part of any. They'll flow through to WIP and finished good as they're posted through. So I want to jump over to the purchase and show a couple of orders that have been posted earlier so that you can see how some of the transactions are flowing through those and so that you can see things hit the right GL account. So I'm going to look for purchase order 106024 and I'm not finding it. Of course, I'm not finding the purchase order I did earlier. Oh, because it's already completely posted and gone. Posted purchase receipts, 107039. So, this is the order I had posted through earlier. An important feature of posted documents is they have both statistics and navigate. When we navigate on an order, this is where you can actually see the financial impact of any transaction. This is going to be available in sales orders, purchase orders, really pretty much any document in NAV now is going to have that navigate feature. So, and here we'll see both, we will see all of the financial impact, of course, will be in the general ledger, but if we're wondering what the actual cost is, where the direct cost from, where the direct cost may have come from, if there were any adjustments for any reason, those are going to be in their lowest level of detail in the value entries. Value entries are where NAV kind of stores costs and value for an item, and it will eventually be picked up and posted through to the GL. So in this case, we see that it's flowed into, I believe, our interim inventory account, which should be 14. So this is finished goods. So this is a finished good that we've purchased, and this is where you can actually see the GL impact of the transaction. So receipts are going to flow into inventory, interim inventory accounts, and their corresponding invoices are going to flow into their final inventory control account. And what I have here is 10837. Now, this is an example where we're seeing two different values. You'll notice in the previous document I had $23.10 showing up in inventory and hitting our accounts. Here we're dealing with $12.60. The reason for this is this is an example where more was received than invoiced. I think 10 were received and 5 were invoiced to show that it's going to leave whatever was not invoiced in your interim inventory account, as it's supposed to. This can be a problem, as I said earlier. If you have maybe a partial receipt or a partial invoice and the numbers don't line up, this can be a reason why values in your inventory control accounts don't look the same. Because people have potentially posted partial invoices. And if they were posted out of sync and at different times, you're going to see different values flow into the different accounts at different points in time. Now, that's how transactions flow through NAV. And of course, if we want to analyze any problems or if we need to take care of any problems, there are a number of tools that are available in NAV to help with that. The first one I would highlight is the GL registers. GL register. This is going to be a list of, oops, Cross Calendar departments. GL registers, this is the actual list. So this, every time a transaction is posted in NAV, it records GL register. So this is where you can see all of the general, you can see basically on a transaction by transaction how many entries were posted. And it's usually a good starting point for you to actually see the underlying entries for each individual GL transaction that was posted through. So if you can ever get it to, say, a single document number or something else, or you know a certain user ID posted a certain transaction on or around a certain date, this is a very quick way. One of the key things that we'll notice here is inventory post cost is our source code. This is the source code that identifies any sort of inventory transaction. So anything that adjusts cost systematically post through the GL, whether it's an item journal, a GL journal, or anything else, is always going to be flagged with this source code. So it's a very quick way of determining was something manually posted or was something posted by the system. Now, the application worksheet, what this allows us to do is, for example, if I do item filter 1928-W, so item applications are what link cost, kind of inbound costs, and to their appropriate outbound flows. In many cases, it's going to follow FIFO processing so that when a piece of, regardless of the costing method, it's still going to try to link those item application entries in a FIFO manner. If it's average, you know, and regardless of average, standard, FIFO, it's usually going to try to apply it to the first or oldest set of inventory in NAV. That may not be the most appropriate way to apply costs or have them flow through. Potentially there's a piece of inventory that you want to actually have because your cost swings, maybe it's average or whatnot, and you want to change what it was applied to. The application worksheet is where you can make these changes. So, for example, I may want to change whether it's a positive adjustment or the purchase that fulfilled this sales shipment. So there is an action to drill into the applied entries. I can see that it was the positive adjustment, and I can remove that application and now go through a process to reapply maybe it comes from the purchase because that was red or green. It can be for one of the other locations. So this would allow me to change where that sale gets its cost from. It could be from a positive adjustment, it could be from a purchase, it could be from production output. Again, NAV will try to do it in a FIFO manner, but that may not be functional for what's really happened in your inventory. And now the final set of areas I'd like to show. Ooh, yes, I do. In our inventory area, functional area of NAV, there are a number of costing reports. So the big ones are really up at the top: inventory to GL reconcile, inventory valuation, and inventory valuation WIP. I'm hoping a number of you are comfortable using these. These are the main reports that I would say. Inventory to GL is maybe, oops, inventory to GL, and I have an as of date. 208, 2018, 0125. Whoops. One 25. So this will run through all the items, and oh, does I have a filter applied? Oh, I have the wrong date. That looks a lot better. So I would expect in this case, because I have average cost, or I have adjust cost posting to GL turned on, the inventory value to be posted is 0 in all the cases because there is nothing we are still expecting, whether it's goods received, not invoiced, or anything else that have not flowed to the GL. Again, you would see differences from column to column in what's expected and what's been posted if you're posting out of sequence. And if you don't have inventory, or sorry, if you have inventory transactions that are separated from their invoicing transaction by, say, a different period. So the last thing I want to touch on, of course, is controlling those periods. This is absolutely vital. There's a couple of different areas and places that you can control this, but on your general ledger setup, by default, we have allow posting from and allow posting to. So right here, there's no restriction, which means anyone in the system, unless they have something on their individual user setup card, can post on any date. This is not really how I would expect it to be configured in a production environment. And if today is, we're operating the month of May, I would expect some sort of allow posting from, say, May 1, maybe to May 31st if you're on, say, a calendar period. But if you're running any sort of 445 or any other manufacturing calendar, this should represent the current period that everyone should be operating in. Then on a user-by-user basis, you can change who can post outside. Oh, it's 2016. Who can post inside and outside of those periods. So if you have financial people that maybe need to clean up a month end or go into the prior period, they would certainly be the ones that you would adjust their user setup record so that they have different allow posting from. So in the user setup record, there is also an allow posting from and to period. And this is where you would, say for your finance users, maybe allow them to post into last month period because they need to finish up accruals or doing any other kind of month-end processing, while allowing someone on a production floor everywhere else in the system to be posting into the current period. There are also, if you need to kind of further subdivide periods, you can have inventory periods. So right now I don't have any configured or set up, but you can basically say, have a list of what are the ending, the inventory period cutoffs. And then you can kind of close and reopen those so that inventory-related transactions, so even if the accounting period is open, so that inventory transactions won't be allowed in a closed inventory period. This would be a way to, just a further protection to say block off periods of time that shouldn't have any inventory movement. So anytime an inventory transaction can be posted in a prior period that's closed, NAV will itself prevent you from posting that unless you have a reason to open it. So we've covered off some of the analysis tools and some of the configuration areas, and hopefully given you some insight into how we can configure NAV. And I'm going to stop sharing my desktop and stop sharing my app and jump back in. Jason, I don't know if there's any questions at this point, so.
Okay, I do see some questions starting to come in. Well, there's people are wondering about access to the recording first. So we are recording today's event. We will be sending out an email to all registrants once that is available, and I think we'll have some additional information, Jeff, from you, additional resources and so forth related to this presentation. So thanks for asking that. Let's see here. How do we change the price of an average costed item?
So the price or the cost? This is where maybe these back and forth don't work as well.
Change the changing the
because,
price is the question.
Okay, so I'm going to view. Let's maybe jump back into share my screen. All right. So if I go back into NAV, if we're going to change a price, so when it comes to changing prices, there's two tools: evaluation journal. So if we take a look at our warehouse, our inventory area underneath the warehouse, we've got a couple of tools here. We've got our item journals and our revaluation journals. Revaluation journals are where, as you can see here, I've got something already set up because I was running a standard cost adjustment last night just as prep for this. For standard costs, one additional step that people will need to run through on a periodic basis when you're dealing with standard cost is the standard cost worksheet to update items, roll those up into any other manufactured items, and then revalue inventory. So all inventory should be revalued with the revaluation journal. This is where it'll display the quantity on hand, the quantity amount, but what will be available to edit is the unit cost. So in the case here, we've got 48 of this item. This is a standard cost item, so it's not an average cost item. You can change the value of an average cost item. It will push it through, but again, it's still going to try to average it across the day or across kind of all of the transactions. So if you're only going to be able to revalue kind of the quantity on hand, so in this case, we've got 48. If it was average cost, we could only impact the unit value of those 48. If there had been other transactions in the day that maybe have been completely posted and no longer have open inventory transactions, it's not going to revalue those because they're closed. So worst comes to worst, when you're dealing with true average cost, and I'm assuming this is a scenario where they basically want to say, hey, it was average costed, it was $10 for an item, and now it's 11. I would start with the revaluation journal, but depending on, you may need to find a day where there's no other transactions happening to revalue it on that day. Yeah, there can be some gotchas with the revaluation journal and average costed items. But for standard cost FIFO costed items and all the other costed items, I would start with the revaluation journal or the standard cost worksheet for standard cost items. Were there any other questions?
Yeah, so let's see here. Sometimes at the end EOM, end of month, I hope my inventory is posted to GL.
I'm assuming that's end of month.
Yeah, my inventory posted to GL amount does not tie to the GL account total. How would you start to research to find out why the numbers don't tie? Jeff, are you hearing us? We might have lost Jeff's audio here, folks. Hold on
Can
for
you hear me
just
now?
a moment while I try. Yep, now we can hear you.
Sorry, I hit mute. Apparently there's a mute button on this headset. Sorry about that. So, kind of the first thing I always check for that, go to the GL ledger, chart of accounts, raw material inventory. So one of the there's an account I'm interested in finding out. I would always go to the actual balance of the account, click through, direct cost. So I would be looking for where is our source code? Do we not have choose columns? So first I need to add the source code to my view. Close that, reopen this. So source code is inventory post cost. One of the very first things I would check that the GL accounts don't have the direct posting check mark, and I check for any sort of source code that's manual, i.e. not INVT post cost. If it's any other source code, that means we probably have someone posting manual transactions, and those should probably be negated as a first thing. Then I would start looking for, are there any invoices that are open that have receipts? Are there any sales orders that have open shipments and don't have invoices? Are there any purchase receipts that don't have corresponding invoices? And usually you can see that at the order level. And then I would check for finished goods, production orders that are not posted. Those are kind of the first areas I would check. The other way to potentially is to break down is to drill into all the GL account or all the GL transactions for maybe a problem account, and start analyzing document numbers. Are there document numbers that are missing that should be there? In most cases, it's going to be those kind of a purchase order is not received or not invoiced, a production order is not finished, or a sales order hasn't been invoiced. The sales ones are usually easy because if you've shipped it, just invoice everything. It's usually the purchase orders and the manufacturing orders that are problems. The application worksheet, that may be something, I'll put my email up at the end. Feel free to send me an email about that one. The application worksheet is, it's not the cleanest design, so it's a little finicky. So, and again, for any of these, if I maybe don't kind of get you the level of detail that you need, say for that end of month, I've gone through a cycle of pulling out the posted entries and kind of lining those up kind of in a simple spreadsheet, and I can maybe walk you through that process. I don't have anything prepared here for that. So again, feel free to reach out to me after. About the exact cost reversing mandatory on the purchases and payable setup. I'd have to, that might be one I'll have to take offline afterwards. I know we're getting right to the end, and I don't have an answer for that one, I'm afraid, Christos. So I don't know if there's any other questions.
Okay. There was the one on the use of the application worksheet. Did you cover that?
That one I'll have to follow up. There's a couple of MSDN resources I would point you at. So another thing that Microsoft has really, I think, done a very good job now is they have a lot of how-to articles. And I'll be honest, I pretty much just go Dynamics and MSDN. So they have a dev center, which is obviously maybe gets a little more technical, but they have so many articles on how to work with NAV, how to use NAV, how NAV's configured. So you'll notice here they've got developer help, but they also have application help. So this is where they'll have all kinds of details on best practices, what the fields are for each setup table. Some how-to guides are all available here. So I know it does get technical, and I will be honest, it's not the nicest to read because it gets a little dull and boring. But if you want to know just about any area of the application, from application worksheet, from adjust cost, from the details of it, this is probably very quickly turning into the first stop that you'd want to make. So there are some articles on the item application entry or the application worksheet, and I can send you some of those references after. I believe this is for Karen.
All right. Well, I think we're at the end of our question queue here, and we're also at the top of the hour. So let's start wrapping up. Jeff, thanks so much for taking the time to present all this information to our audience today.
You're welcome. I certainly hope it was helpful for you guys. I know it's a little weird. I'll be honest, this is the first webinar I've done, so a little weird when there's nobody there responding. So thanks a lot, guys.
Well done on that, and we're glad to have you joining us for the first time today. Thanks to folks in the audience for your attention, for all the great questions, and for your feedback as well. We're getting some really positive feedback for Jeff here. So with that, we're going to wrap things up. Please do be on the lookout. We'll send an update when we have a recording available. And we're going to end there. Have a great day, everyone.
All right. Thanks, guys.